Hello dear traders, welcome back to Insta TV. You're watching daily financial news with me, Anna Kasatkina. On the oil front, crude is making attempts to recover. However, it still lacks strong upside momentum to extend gains, with markets oversupplied and investors concerned about the risk of further potential losses. On Wednesday, oil prices edged higher for the first time in 8 trading sessions on upbeat Chinese trade balance figures and a surprise decline in weekly crude inventories in the United States.
Following the drop in US crude inventories, reported by the American Petroleum Institute, oil prices preferred losses. The Brent crude benchmark is stabilizing near $31 per barrel. If the official data from the US Department of Energy confirms the drawdown in crude stockpiles, oil prices are likely to start a recovery. The immediate target is at $32.15 per barrel.
Despite the fact that the overall sentiment in the global financial market has somewhat improved, oil remains under heavy pressure due to excessive commodity supply. Moreover, the market speculation that crude prices could fall below $20 per barrel adds to fears that 2016 will prove to be an extremely tough year for oil traders. Against this background, energy investors are closely watching the upcoming oil and gas reserves data. The official US report is slated for release later in the day. Earlier, US oil reserves dropped by 5.085 million barrels in the week that ended on January 1st, 2016, after adding 2.6 million barrels in the previous reporting period. Experts had predicted a gain of 400,000 barrels. This time, market estimates are for an increase of 2.504 million barrels. The data is expected to produce a visible effect on crude oil prices. The latest report released by the American Petroleum Institute yesterday printed a considerable decline in the amount of oil in US storage tanks seen in the past week. Analysts had expected a rise of 2 million barrels. However, the actual figures indicated a contraction of 3.9 million barrels. The atmosphere in the market is still turbulent, as there is no hard and fast proof that oil prices will indeed begin to climb. The current crude supply in the market still exceeds the demand amid growing shale oil production in the United States and OPEC's decision to keep output quotas steady at record highs. Some believe that the global oil glut will swell after Iran scales up crude exports by 500,000 barrels. This was Daily Financial News on Insta TV. Thank you and goodbye.